September 9th. I hope you have an amazing Friday. The weekend is around the corner. Every day is Saturday, is tomorrow, and today, all at the same time. So today's your daily financial news. Real quick shout out to Thatch, who, if you don't remember, was our live stream guest yesterday at 10 a.m. We did it successfully yesterday. Almost 70 minutes of Thatch dropping wisdom. Couple of things, if you have not seen the video yet. First, it was the first video on my channel, which I flipped to 18 and over. Thatch got a little passionate and carried away and dropped some very colorful language. So I would not watch that video with your kids around, just a fair warning. It is extremely valuable. It is one that I will rewatch because there's a lot of wisdom. We talked about bigger is better is nonsense. Thatch shared some great stories. Thatch is building a 100-unit apartment in Oakland, California. The net of the story is cap rates are going up, rents are going down, interest rates are going up, and he has to cut a 7-figure check. And ultimately, what will happen is there will be a capital call. Thatch talked about what is going on in the syndication business is there will be lots and lots of capital calls. Third, I guess. Then another pearl of wisdom that Thatch gave us yesterday. Why is my screen going dark? There we go. Something else that Thatch gave us yesterday. The bigger the name, the lower your return. Think about that. The bigger the name of the syndicator, the lower your return is going to be. We talked about Burr. We really dug into this. I told Thatch that I think Burr is a very, very risky strategy these days. He agreed, and then he highlighted what he is doing around Burr. Basically, taking the concept of buying the right property, a 2-bedroom, 1-bath. He's extending it out to 3 2s. He's adding an ADU. He is adding value by adding square footage and adding income. I thought that was a great story. And then finally, we talked about raising kids. Thatch has millions of followers on TikTok and IG and all these platforms. And we are watching him raise his 2 boys right in front of us. We talked about buying your kids a Tesla, which I thought was pretty interesting. So again, watch that. Be warned. It's the first video on my channel that says 18 or older. All right, Cathie Wood. Well, she is back at it again, folks. If you don't remember, Cathie Wood was calling for a Fed pivot in September. Cathie Wood wants the Fed to pause. Cathie Wood wants the Fed to cut. Cathie Wood is back at it again. She is saying that in the next 3 months to next 6 months, the Fed will pivot, the Fed will cut. We have epic deflation coming. You have to remember, folks, Cathie Wood is invested in stocks with high growth, no income. She needs low rates. She needs her companies to be able to borrow capital. That's all I got to say. So again, Cathie Wood is saying, hey, we can see a rate cut this year, right? 3 months. That's December. I don't know, but hey, maybe she's right. So Cathie Wood is expecting it. She actually said Powell needs to put down the sludge hammer that Paul Volcker used. I thought that was a very good analogy. You can just imagine Paul Volcker banging on the economy with a sledgehammer. So pretty interesting. Dollar General. We have talked about this on this channel. More and more people, as we get into a recession, that as we feel less confidence, as negative wealth effect takes over, we'll be trading down. All right, you'll be trading down, and Dollar General is already seeing more and more people visit their stores that have higher incomes and higher wealth. 2% inflation. Who is this? Sorry about this. Oh, Interactive broker and chairman Thomas Pettifree. Thomas Pettifree, I don't recall watching him before, but what he said today scared me. What I read today, I believe he said this yesterday. Thomas Pettifree says, the only way the Federal Reserve gets what they want, which is 2% inflation, is if we have a depression. Ugh. Can you believe it? A depression. Not sure why my camera keeps turning off that way, but interesting. So again, we need to be careful. Again, Thomas Pettifree is calling for a potential depression on our journey to 2% inflation. I don't see it, but there's a lot of things going to happen over the next 12 to 18 months. Again, 2023, you've heard me say it. I do not feel good about it. It could be the worst economic year of my adult life. I don't see a depression, but hey, yeah, pretty scary. Dolly Parton. I don't think I've ever talked about Dolly Parton. The reason I bring her up is Dolly Parton had a quote that really hit me. Anna Kelly shared it this morning. Full credit to Anna Kelly. But it really came as I was revisiting the conversation with Thatch Nguyen. So Dolly Parton is said to have said the following: never get so busy making a living that you forget to make a life. That hits me. As someone who used to work 80, 90, 100 hours routinely, as someone who routinely flew on airplanes and was terrified every mile, that quote hits me. And again, hopefully, I'm going to ask Olivia later in the day if she thinks we are doing that. Are we living a life? Are we so, never get so busy making a living that you forget to make a life. That just hits me, and I want to talk to Olivia about that later today. Citigroup. Remember what we talked about with Bank of America, first-time home buyer, all of that? I said the first program isn't the concern. It's when the copycats come out. Well, Citigroup has latched on to that idea. They had a pilot project earlier in the year. They are now adding more and more dollars to first-time home buyers. Why is this happening, folks? It, quite frankly, is simple economics. Banks are not lending as much as they used to. Mortgage applications, refis, all things are down. So they have to get creative. They have to look for new business. This is what's happening now. So Citigroup is going to be expanding their 3% down, no PMI, first-time homebuyer program. Again, remember, Bank of America being first wasn't the problem. It's when we get copycat after copycat after copycat that we could lead to real problems in the future. Years down the line, deals done today won't be foreclosures tomorrow, but deals done today could be problems later. So haters gonna hate. We're gonna do that one in a minute. I want to go through just other things that I noted. First, DocuSign beat top and bottom. These are earnings that came out in the last 24 hours. Zscaler beat top and bottom. What is top and bottom? Top is revenue. They sold stuff. And bottom is earnings. Sales minus expenses, earnings. So again, DocuSign and Zscaler both beat top and bottom. RH, or Restoration Hardware, missed on revenue, issued a weak forecast. And Zumiez, which is a clothing retailer, missed top and missed bottom. We are seeing that pretty consistently in retailers. I do want to ask one question of all of you. I do think there is going to be an opportunity to buy stocks in the next 6 months. So I want to ask you right now, if you had one stock to buy and you had to hold for 2 years, no trading, no rebuying, none of that stuff, what stock would you buy? I'd love a list of stocks from my audience, because as I look to get a shopping list, I'm just curious what you all are looking at. So finally, let's close on a hater. This hater purposely put some information out that she thought would hurt me. I'm going to read it verbatim, and then we are going to talk about it. This is from Herato Rosita 26. It says, in quotes, price is not that important. Cost of capital doesn't matter. Appreciation is irrelevant to me. The Michael Zuber principles. Space Down says, I wonder what real big time investors would say about this, with the laughing and crying emoji. So again, she is saying, Michael, you are an idiot. You are a moron. Of course, price matters. Of course, cost of capital matters. Of course, appreciation matters. Well, Rosita 26, you don't understand what is important with rental properties, in my opinion. So we are going to go through each of these, and I want to hear from you. Am I right? Am I miscommunicating? Am I wrong? Is she right? Is Rosita 26 right? So price is not that important. You have heard me talk about seller financing. You've heard me talk about terms. You've heard me talk about creative financing. You have heard me tell you a personal story of buying a single family home, overpaying for a single family home. Remember this story? I bought a 100K house for 120 grand and got a 1% 30-year mortgage. Remember that story? I would do that deal over and over and over again. So Rosita, price is one variable. I will gladly pay list price. I will gladly pay over list price if and only if I get my terms. Sellers can't get their price, and sellers can get their terms. The seller wants price, I will have terms, and I will be happy to overpay, Rosita. So yes, I do not think prices are that important. Number two, cost of capital doesn't matter. Again, I don't think it matters. I don't care if it's 6, 8, 10, 12, shoot, 22%. It is one variable on my spreadsheet. And if I put in that variable and the end result is a negative number, meaning alligator, I don't do the deal. If cost of capital is the same for everyone, Rosita, I don't care what it is. I am going to buy a cash flowing asset with 30-year fixed rate debt that cash flows today. Today. I don't care what it is. I will get 30-year money at 10% all day long. And then as time goes by and rates do what they do, I'll refi later. So Rosita, I do not care about cost of capital. Sorry, I guess you do. And then the final one, appreciation is irrelevant to me. I agree. Appreciation is irrelevant to me. But Rosita, if appreciation is important to you and you care about appreciation and you put appreciation in your deal analysis spreadsheet, I have bad news for you. When markets change like they are right now, you are going to go bankrupt. Appreciation happens. Mortgage paydown happens. Recycling capital, as I have done lots of times, counts on appreciation. I do not care about appreciation. I do not count on it. I think anyone who looks at appreciation before they buy a property is destined to blow up and go bankrupt. So, Rosita, you are absolutely right. Michael Zuber principles. Price is not that important. Cost of capital doesn't matter to me, and appreciation is irrelevant to me. I agree with you word for word. I should make a t-shirt. I should make bumper stickers. You are right. Harato Rosita 26. These are my principles. I stand by them. Thank you for putting them so succinctly. Thank you for watching my channel. And thank you for these quotes. I think they are amazing. Take care, everyone. Enjoy your weekend. Bye.